foundation. So what we trade basically now is, or what I trade now is what I like to call a tetrad trading system. Contains four things, right? Structure, liquidity, SNR, and engulfing.
Okay.
Now, the most complex of this system is structure and liquidity. They are the most complex. And by the most complex, I mean like they are the ones that people find it hard and very difficult to understand. Um, I went a great deal to explain structure to you initially. So let's see how much more you can remember. Let's pull up. Okay, let's use BTC, but let's use another pair. Let's use Bybit. Okay, so this is Bitcoin. Can you mark the structure from here to here, just to see what you remember actually?
Okay. Publish. 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 Now this.
Abba now. Abba, Abba. No, no.
We didn't get it right.
This is not structure you mark though. This is something else. This is what make people lose money. This, this is terrible structure. All right. I know you still probably have some of the videos. Probably you probably go back to watch them, but like I'll set the tone for you now. So we'll start again with structure, right?
No.
So particularly, you must ask yourself if you're marking from here, where's the eye that created this guy? What you marked, all these things that you marked, they are not structure that belongs to the weekly time frame. You must remember that every time frame has its own structure. Every time frame has its own structure. So when you're marking structure in a particular time frame, you must ensure you're marking structure that belongs to that time frame you're marking on. So the question is, if this is where you want to start marking structure from, where is the eye that created this load? This eye. Okay.
Yeah.
So I created the load. So it means that everything from here, all of this, they are internal. I remember we said the weekly is external, sorry, to the daily. Daily is external to H4. H4 is external to H1. H1 is external to M15. M15 is external to M1 and M5. So that means that internal to the weekly is the daily,
Yeah.
internal to the daily is the H4, internal to the H4 is H1, internal to H1 is M15. Okay, so this is weekly chart. So internal to the weekly is the daily time frame. So everything we are seeing internal here is likely daily structure. So if I'm to draw this, then that's why this indicator is one of the best tools you can ever have. Just turn it on. So when I turn it on, marks the structure. So it shows me from here we have a single leg up to this point, to this. We have an inducement here. We have a true break of. We have a fake break of structure here, an inducement. And we have this over here. We have the retracement over here. Then we have a break over here. And all the way, we have this. Okay, so this is weekly structure. Everything we've marked here belongs to the weekly time frame. If we go lower, say to the daily, the same things we've marked, but see the difference. Now on the daily, you can see that the last eye, the eye that created this flow is this guy, and we'll find out why. Sorry, that was a bad drawing. So let me make it smoother. This eye, okay? And we have to find out why. Okay, so let's pick it up from here. So this was the last eye to this. Then price broke over here. So we have this to this, then to this guy, then to this guy. Then we have this little guy here, then this guy, then this guy, then this guy, then this guy. Then we have a straight leg down. So the first break would be to this guy, then to this, Then we have this little guy over here, little guy over here, little guy over here, little guy over here, little guy over here. A lot of little details over there. But that shows you the internalness of this structure. So we drop to H4, you see how more internal all these things are. Okay. This guy that is just a single leg on the weekly, you can see a lot of structural legs there on the H4. Okay, so structure is very important. The moment you miss out on structure, you need to draw structure that does not belong to not a time frame on a time frame. There's a chance that there's not going to be a logical reason to pick a trade. That's why I would say structure is the singular most important thing. Singular most important thing. Now, to lay a foundation, what is the easy way to be able to draw structure? What's the easy way? So you must remember the following. Number one, every time frame has its own structure. Okay. Every time frame. Oh, Grammarly, please get off me. Okay, so every time frame has its own structure. Okay, number two, every structural leg has a source. Okay, it has a source. Number three, pay attention to candle colors. Okay. All right, you're back at it. Sorry, I don't know what happened. So these are three solid rules that would help you keep or understand structure, be able to mark it properly. Number one, every time frame has its own structure. Don't forget this. The moment you forget this, you'll be marking structures that do not belong to the time frame you're interested in. And when that happen, you would make mistakes. There will be mistakes. Again, every structural leg has a source. Okay. Well, what do I mean by that? That means if you want to mark structure from here, for example, from this low, you must ask yourself which eye created this low. This eye, obviously. So it means that this is the source of this low. So it means your first leg must be the one that breaks the source, right? Breaks the source, retraces, goes all the way high, comes back, and on like that. So every leg has a source. So when you want to mark structure from a particular place, you must ask yourself, what is the source of this low? Where is this low coming from? Okay. Next thing is to pay attention to candle colors. Candle colors dictate the change in trend. Okay, so let's do it. And then this indicator is a powerful indicator. It marks structure for you automatically. So if there's anything wrong, if there's anything you're missing, or if there's a way to master structure, is to mark on your chart and then confirm with what the indicator has marked. The indicator is custom built. It can't be wrong. I can tell you that for sure. Okay, the indicator cannot be wrong. I think I sent you a copy at the time.
Yeah.
If you mark from here, you can see that this red candle was the one that broke this eye. Can you see it?
Yeah.
Okay, so candle colors dictate the change in trend. Never forget that. So we have this retracement here, and then you can see we have this eye, again, another retracement here. And then finally, we got this eye. Now, people would argue that which one would you take, this eye or that eye? You just have to zoom in. Never forget candle colors dictate. So when we zoom in, I want to see what is on this candle. That's why I'm zooming. I want to decide if it's a bearish candle or a bullish candle, okay? Because candle colors dictates the trend. So as you can see, it's a bearish candle. So this is the hijack because all of these guys are bearish candles all together.
Yeah.
And then we have retracement up to this point over here actually. Then we have this. Then we have this. Then voila. Okay. Structure says a lot. I'm going to be very, very honest. A lot of people struggling with a piece of trading. Structure can be a missing piece. Structure is likely the missing piece, right? Structure is going to help you decide, oh, okay, I'm taking a trade here. how far can this trade go? Like I used to say, structure is going to tell you your targets, your TP, your SL. Where do you want to put them? Structure is going to answer all of those questions for you. And that brings me to a very important trait, I think from last week. Now, see, structurally, on the daily, we have a leg coming from year to year to year. We have this over here. And then from there, we have this little guy. And then we have this break. Now, obviously, this is an MSU setup. Price takes the high, takes the low, true break of structure. What happens? Price comes to the classical scenario over here. Well, if this is important, we have to consider other structural legs. So when we drop down to the H4 charts, see this. This is what we have on the daily. This is what we have on the daily. But internally on the H4, you can see there is something much more different. The structural legs are different. The details are different. And why is that? The H4 structure is telling me where the liquidity is. We're not talking about liquidity yet, but this is to give you a sense of how important structure really is. So if I decide to mark H4 structure from here, let's say I start from this guy. So I have this I have this retracement, then this guy broke this guy. So this guy next, then this guy next, then this guy next, then this guy broke, right? Then retraced, right? And then because this retracement did not break this low, I would see this as a single leg up to this point, right? Because it's either you break or you break the low. So it did not break the low, it broke the high instead. So that's a good point. So add retracement. For now, this is on the daily. This is a single leg from here to this point on the daily. It's a single leg from there to that point. But structurally, I have a lot of information. One, from the knowledge of liquidity, at least you will probably remember structural liquidity. Structural liquidity is when we mark the last low before the main low or the last high before the main high. And looking at this H4 structure, we only have a single leg. We have a double leg, right? This is the daily, which is a single leg. This is the H4 chart here. And the last low, if this is our main low, the last low before the main low on the H4 is this guy over here. Price comes, takes this guy out. In fact, takes this guy out. Now, I don't need to tell you that this guy from year to year that is internal belongs to what time frame? Let me ask you. What time frame does it belong?
Not to the daily time frame.
Come on. This is the daily time frame here. A single leg.
Yeah.
I'm asking for internal one. This one. This internal one. This one.
Okay, it belongs to H4 time frame.
Yeah, this single leg belongs to the H4 time frame, but internal to the H4 is what?
H1.
H1. So when we go to H1, you see that this single leg has more details to tell us. You see it. Let's see. Let me show you. And that's why structure is important. It's important. So important. Now, on the H1, what looks like a single leg, if I decide to take it up, I probably will have to take it from here. So from here, we have this. And then I'm not sure if this guy broke. I'm not sure if it broke. Let me confirm if it did.
It didn't break.
Didn't break. Okay, so we have this. And then we have, please follow through this. We have this. Then did this guy break? Okay, this guy broke. We have this. We have this. We have this. 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 We have this. We have this. Now, what does this tell me? This is the high taking. On H1, the low taking. This is a true break of structure on H1. Okay, on H1, very important to note. Okay, so if this is on H1, remember the high or low of an MSU is a main low, right? So this is our main low. Our last low before the main low will be what? This time frame, right? With this low right here. So if price decides to sell from the daily or the H4, where will be your primary target? This will be your primary target. If you decide to take any sell from here, why? You are considering structure, you are considering liquidity. This is the hack to how my trading works. And that's why if I take a bad trade, a student can come to tell me, oh, guy, you did not see this. This was even before the trade pans out to be bad. Oh, okay, you missed this. Why? Because there's a logical approach. Everybody has to think the same way. We are seeing this the same way because it's straight up. if I mark structure here, where I am, wherever you are, if you mark say structure, it should be the same thing. Okay, we are looking at a logical approach, a thought process.
Yes, sir.
Yo, okay, yeah, you're back. Okay, so let's
Sorry,
get
my
back to it.
network. I don't know. Ether just ran away. I don't know. I just have to change my
The same
house
thing
Wi-Fi
happened.
to MTN now. My house Wi-Fi.
Oh, okay, no problem. Let's get let's make
Sorry
use
about
of
that.
that.
Okay.
All right. I last said every time frame has its own structure. One thing I want you to know is that whatever we talk about structure here, that's the law of structure. Whatever you've learned about structure before is absolute crap.
Yeah.
It's crap. It doesn't work. It's not logical. There's no basis for it. There's no thought for it. You cannot code a you cannot automate it. What we want to do is to be able to create something logical, something that even if all things are wrong, if there's human error, can still point us to the truth. Okay. So you must take this as the law. This is the only thing about structure that you can find correct. And that's why what time frames have we been on? We've been on the daily, the H4 and the H1. Looking at this narrative, thinking like this, you would have been able to identify this trade from here, your stop below this MSU low, and then long-term targets. Because this is a weekly trade, remember? We came from the weekly time frame. Or from the daily. Let's go to the daily. It came from the daily actually, not the weekly. So from the daily, where are we again? So from here, since it's a retracement leg, you probably want to target the all-time high. Because you know from what we've talked about before that there is nothing here that is going to reject price.
Yeah.
There is nothing here that is going to reject price. Okay. And so from just that thinking, swing trading is not something that happens suddenly. You might have to wait a long time. But like when you catch your fish, nothing is going to stop you when you catch your fish. So this is a very decent trade, very good trade, actually. But you have to have had the foresight to anticipate, to wait for it. And it can be on any time frame. Let's see a random time frame that I don't trade. Let's see if you are inside. No, let me see. See, I don't have any, I don't trade this shit. Okay, so let's see the daily.
You enter on that BTC trade after the confirmation.
This is direct entry. That trade is going to be a direct entry trade. There's no confirm. The confirmation is already there. This is
That's
a direct,
because of your stop loss level.
yeah, because it's below the MSU. Remember, I said that this is an MSU over here.
Yeah.
One time
Okay,
frame.
okay,
That
okay, okay, okay.
so the stop is below the H1 MSU, or at least almost below it. So,
Yeah, okay. Yeah.
yeah, I know I was in a buy from here. I didn't know when this. I think it must have happened during the week. So I only trade Bitcoin on weekends. I'm sure I would have got this trade. I was in this buy from this place. I was in a buy to from somewhere. Let's see that random pair was opening. I think that pair is shit. Let me open that one. NZD. Because the GBP pairs, all these exotic pairs, they move a lot and they are very, very good for swing trading. All those GBP and then the Edward pairs, they are very, very good for swing trading. So let's see an example. Let's cut. What can I do? I do want to see the price action before, so that's a problem. So let me just go to, I think there's something for go to. Let's go to let's say March 26. Go to replay. Oh shit, I'm still going to see the price action, but no worries. So let's assume we have this with us, and then you assume sure that you want to wait, you want to apply. So how would you look at this? Number one, structure. So we said we have four things in place, right? Structure, you must remember this. It probably could be a wallpaper, could be anything. Structure, liquidity. Now, if structure aligns with your trading and liquidity is saying no, you don't take the trade. Okay, because this is not to tell us when to take a trade. It's also to tell us when not to take a trade, right? When not to take a trade. So structure, liquidity, SNR, and engulfings. So for example, this trade looks beautiful. So we say, oh, price came here. So we're looking at, oh, there's efficient pricing over here. And then price gave an engulfing buy, right? So an engulfing buy here. So I've done two things now from our four components of trading. I've done structure. Structure is where we find efficient pricing. I've done engulfing, right? I've marked structure, efficient pricing, and then I've marked engulfing. So considering liquidity and EG, what do I have? Now, if you look at this, you would see that this is price taking the high over here, price taking the low. So from year to year is a point that price can retrace to continue higher. Do you agree with me? Because this is an MS. Okay. So if that's an MS area, it means that the structure we have here is this. I want you to follow through this. This is very, very important. This to this, and then to this. So what does that leave me? That leaves me with this internal structure. So for me to mark this internal structure, I must go to the time frame where that structure belongs to. Okay. Obviously, I know it does not belong to the daily time frame. Okay. So I go lower. So H16. Okay. So on H16, I can see some inclinations. How do I know that? Because this guy is also a single leg down on H16. But after that break of this low, we have this little chalky retracement over here. Then we have this over here. We have this retracement back. Then we have a break, or finally a break here. So this is a single leg to this point. Right. And then from there, we have this, a lot of stories, blah, blah, blah. This, we have this almost, then we have this, then we have this, and then suddenly we shoot up to this level. Okay, so we shoot up to that level. So that begs question. So internally, we know that we can get efficient pricing structurally to this level over here. But the question is, if price should come here, would there be a buy? So we have two questions to answer. Can price buy directly from here, or do price have to come here to buy? So what would I do as a trader? Number one, I set an alert here because I'm expecting an action to happen. So if I'm expecting an action to, I can't set alert. I'm expecting an action to happen. I put an alert. So when it happens, I'll be informed. I'll be aware because this is already a planned trade, right? Because I know that, oh, okay, within this zone, I'm expecting a buy. And then when price comes to this efficient pricing, especially within this micro zone, because this is also an MSU, doesn't make sense. You can see price took the high over here, took the low. This is a true break of structure over here. So internal MSU. So from this big zone, we will be able to narrow down this small guy. Like if price comes a inch here, I'm going to set a buy. But does that mean price would definitely come here? No, that's the only price will come here. It's based on if bias. So if this happens, I'm going to do this, right? So, and at the same time, we have this. Now, one thing you can tell, and which is why I said we should follow this through, is look at this now. To this, to this, to this. Is this move, is it M16 structure or internal? This guy here is internal, obviously, because for us to decide if it's M16 structure, it has to break either the high or break the low. So it means that the time frame that owns this structure is not M16, it's not H16, sorry. So you have to go lower. So let's see, let me go to H4 straight so we don't waste time. So on the H4, we can obviously see that we can find H4 structure. So we have this guy over here, we have this, we have this, we have this, we have this, So you can see that the initial buy is coming from somewhere here.
Yeah.
So if the initial buy is coming from somewhere there, the question is where can the first target be? So let me see. From here to this, to this, to this, and then we have this. So we have retracement. So if I'm taking a buy here, I know for sure that the buy should at least get to this high.
Yeah.
Again, this might not look like a swing trade, but it's a lot of pips, I'm sure, because these pairs, the way they move crazy. It's not a lot to run more. Only it's 6 pips.
Most wonderful.
Yeah, they're good. I'm sure good would have moved more. So, and again, it's about the RR anyway. The RR. This is a decent trade. Now, the question now is based on what you can see, this is completely from SNR, sorry, structure and liquidity. We've not even considered anything SNR, anything engulfing, anything blah, blah. We've not considered those at all. At all. Because if we start to consider those, more questions will evolve. But we have to perfect these two first because they go hand in hand, structure and liquidity. So let's play the thriller. Let's make this shit fast. See? Guess to targets, and then let's watch. So again, to get the better narrative of what happens, we change time frame. Okay. So you want to go back to the daily, you want to look at the sequence of events. What's happening? Why is price not coming back to where you already planned up for price to come back to? So you're not fixed on just one thing that can happen. You're giving yourself if scenarios. Like if this happen on this time frame or that time frame, I'll take this trade. If this happen, I'll take this trade. That way, you're able to build a more logical approach to looking at everything holistically. So I'm not going to say, oh, until price comes here before I decide to buy. Price can still be here and buy, but what time frame am I on? What structure am I on? What's on that time frame? Why am I deciding to take that buy? Those are the questions we want to answer. So structure now gives us that idea that it needs to be mastered. If your man does not know structure, the man is making a big mistake. So let's play. Let's see. Now, one thing I want you to notice before this stuff dropped was the daily structure. Now, at this point, let me take this away so we can be clear. Let's take this little guys away. Let me take this H16. Hey, let me leave the H16. Let me take this away. So this is the daily from here. Remember, a single leg up to here. Then we have this. Then we have this. Remember color change, right? This guy changed color. Then we traced on this one candle and still came up on that same candle, and then dropped. So what do you see here? Clear and crystal. Now, a lot of things can determine if price is going to buy from where it is currently or wait till we get to our zone. And those things, we'll talk about them when we get to SNR and engulfing. What we are just concerned about is liquidity, okay? So we know for sure that if price wants to buy, it could buy from here. It could also buy from where it is currently. But obviously, this is a 3 candle type of breakout. So anything can happen. But you want to ask yourself, if this happens, what's our next time of action? So let's just wait. Let's see if price comes. See, price doesn't even come to that zone yet. See, these are the crazy things that happen. One person they wait for buy here, price don't buy from here. But we are not talking about engulfing and stuff now. So again, as price begin to move on this time frame, this way, before the break here, you make it the break here, you already have confirmation that we are bullish, correct?
Yeah.
Why? Because this is an MSU. They are taking the breakouts. So on this retracement, by all means, from structure, you can also tell from structure and engulfing because this is a type 2 structure. Price was supposed to sell from here, supposedly to the downside, but failed to do that. Retrace the lead to break. Price is likely going to use this failed retracement to continue to the high side. So let's think about structure again for a bit. What we have here, this movement here, internal to the daily, yes. So what time frame is that? H4. So let's go to the H4 a bit. So again, this is what forms our basis for our reasoning. Okay, so on the H4, structurally what we have is from here. So let's say around this guy, yeah. Then to this, then we have this, and this was our first break on the H4. Then we have this. We even have it up to here actually. Then we have this guy, Yeah, this guy. Yeah, this guy. Yeah, this guy. These are all H4 charts, all on H4. Now, the interesting thing is H4 structure, first break, second break, third break. This is established trend. Okay, establishing a bullish trend. Now, one of the other things you will notice is that this cell was a single candle down to wherever the L it was.
Yeah.
Single candle. So if I decide to pick a buy here, where do you think my target will be? First target. Let's say my stop is below this level. My first target will obviously be this
Because
high.
yeah, that okay, because he gave a two-time breakout there.
Okay, two-time breakout. One. What else?
No, this why before coming down to your buy level, it gave a two-time breakout.
Okay, what else? I'm asking, why would this be my first target? That's the question.
Yeah, that's what I'm saying. Because from that level, it gave we have a two-time breakout already.
Structure. See, this guy brought a single leg down to this point. So for me to be bullish, if I'm really going to buy, this must have a single leg up to clear the previous eye out, which he did.
Mm.
My first convenient tip that I know for sure, if we are buying a truthful price has to take this eye out.
Right.
That's the, that's the logic. So back to the daily. So for us to have a better understanding of what happened, you can see that when price retraced, price was targeting a specific level. Why? We could not answer that question on the H4. In fact, on the H4, I was staring on this chart looking for which liquidity did price induce? Because obviously we could say, oh, okay, this is the last low on the H4 before the main low. But price still dropped significant pips before getting to the target. So whenever you have this situation, the answer is always on the higher time frame. So you can see there's a classic scenario here on the higher time frame that
Yeah.
is so beautiful. So beautiful. In fact, if we check H16 and check all this shenanigan time frame, we would also get more reason why we should consider a buy or a sell from particular levels. So because of this H12, if I had seen this trade before it happened, I would have adjusted my SL to this engulfing. When we talk about engulfing, we'll talk about that better. Right. So structural liquidity masterpiece. See, if there's anything you can do to at least shift your mindset about how the market is to master structure. That is the most wrongly taught idea in trading, in forex trading. I think ICT is the culprit. I think so. Yes, I think it's the major culprit that wrongfully taught this thing. So a lot of people had wrong knowledge. If you ask them to mark structure, they're marking internals. They don't understand what they're doing. They're just marking the trend from somewhere. There's no logic behind it. They can't tell what time frame owns the structure. They can't be just because trading is about time frames. Time binds trading. And that's why we are trading. There's no time to trading. It won't be possible to trade at all. It won't. Because what time, when would you, what's it called? How are you able to know what is happening at a particular time at a particular place? Because all traders were at different places, different location. What binds us together, even in different time zone, is this candlestick chart with the time frames.
Yeah.
Everywhere in the world, we are looking at the same time frames, regardless of our time zones. So if you don't know what time frame owns what structure, you are playing a lost battle. You've already lost the battle even before you start to go to the war. The battle has been lost. So structure is very, very important. Very, very important. The minute you take a hack of structure, you're taking a hang of everything. So again, back to daily. So we've been able to establish now a lot of things can happen. If you're going to be a swing trader, you have to pick pairs. You can pick 4 pairs. You might not get the best setup, but like you would always have one setup on every pair every week, right? Because you are giving yourself time to think and you are backtesting those pairs every day. The day ends, you are checking the pair again. Oh, what happened today? What can price use tomorrow? You are marking those levels and you are setting your alarm. Marking those levels, you are setting your alarms. Okay? So when price triggers, either you want to wait for confirmation or you want to take a direct entry, you decide based on how the market presents. Okay, so let's see another pair, another swing worthy pair. Any pair, you can trade swing on any pair, but I'm just trying to look for volatile. What is volatile pairs? Let's see USD Mexican pesos. This one is a crazy pair. The way it jumps, you'll be shocked at how many pips it moves per time. All right. A lot of people make a fortune from trading those.
I love the pay a lot with USD ZAR.
That's how stuff. Yeah, I think
I was still doing a lot of forex before I focus on gold. I used to trade it a lot.
see what I knew people used to make money from it. But I don't know. I don't know why I don't trade it. Maybe because of the spread. Sometimes it's not me out. Since I trade majorly intraday. So look at this beautiful pair. This pair is so beautiful that you base everything about structure and liquidity. Like just merely looking at it. Now let's test your knowledge so far. Let's see. Let's test. Though you might not be able to get a good angle at this, but let's do it anyway. Let's do it. Let me reduce this. I'm not sure it's. I want to show my screen properly so you would be able to mark. But let's see. Let's see what you can make out of this anyway. So I want you to mark the structure from here to the end, basically. Yeah. So this will be the last one we'll check. Okay.
Okay. I think I'm done. Hello, sir.
Yo, okay. Let's. What do we have here? Let's see. See, now we have a big problem. So you have to go watch the video on liquidity again. Oh, sorry, on structure again. Okay, and then I'll give you a few thoughts, but let's tackle this first. So now, I'm not sure if it's because you didn't get a proper view of this, or I think that could also be a reason. But, let me take this out first. Well, you see, we had a break here,
Oh, okay.
break here. There was retracement, and then we have this candle up to that point. Okay, and after that candle, we had this retracement. And the question is, did this guy break? Okay, it broke. So it's that high to this, which is correct. To this, that's correct. That's correct. That's correct. We made a mistake again. Okay, we can't say price king because this is what you drew here is internal. You should look at it. It is not daily time frame. You see, it's internal. You are not breaking any high. You are not breaking any low. You just drew it within. So that's not structural. Okay, this is the last row. So from here, you should have this over here. You have to break something. When you're not breaking something, when you're marking structure, you are making a mistake. That's when you should start suspecting that you're making you're marking something that's not that time frame structure. So that retracement to here, to this point, then we have to this, broke this line, then we have this, and then we broke this. Okay. So always remember when you're marking structure and you're not breaking anything externally, you're likely making a mistake or you've made a mistake. Okay. So what you do is on M15, H1, and H4, you send me screenshots of any pair you want. You mark structure on that pair. So three screenshot on M15, three on H1, three on H4. Then I'll look at it and then we can jump on that call tomorrow. I'll let you know the time tomorrow. Okay. Is that
Okay.
okay?
Okay. So when we get our structure on higher time frame, then we move to the next lower time frame for
Yeah.
the internal review, right?
Yes. In live markets, yes, you have to do that. But this tax I'm giving you is independent. So you can M15 independent, H1 independent, H4 independent.
Okay, on the same pair each.
On different pairs, you can any pair you choose, any pair you want. But gold should be a part of it.
Okay, I just mark the M15, H1, and H4.
Yes. On any I think months particularly, I think I would prefer match this year's match on any pair. This year's match on any pair.
Okay, no problem, sir. No problem. All right.
So I will text you the time. I'm on call, I'm on duty tomorrow, so it
Oh,
should be in the anyway, so I'll let you know when I'm free.
all right, sir. No problem, sir. Really
No,
appreciate it.
no problem, my bro.
All right, sir.
So,
Thank you.
bro, yeah, take care.